Now, the uncertainty for us is on the material side, where we serve end markets like the automotive sector, building and construction. And here I have to say that the second wave is a concern, given these spikes that we're seeing in various geographies. We're also, of course, operating around the world, and we're very conscious of the fact that, particularly in the Americas, yes, there's a second wave, but there's still the first wave, which is ongoing. So lack of visibility, difficult to give guidance. On the other hand, as Dimitri just said, we are taking all the measures that we can to make ourselves competitive and able to adjust to the conditions as they evolve.
When you started out the conversation with us, Geraldine, and you mentioned this acquisition of Urba, and I'll just point that one to Dimitri. Do you want to weigh in on what the deal-making process looks like in this current market, whether it's still very competitive or whether you're getting much better pricing on assets at this point?
Yeah, maybe on that specific point. I mean, deal-making is always a challenge and an adventure, but we're looking at assets, and I think we've done 3 acquisitions over the last 6 months with CSK in the culture business with enzymes and cultures in semi-hard cheese. We've done Glycom in the early life nutrition business and Urber in the specialty animal nutrition space. And all have a different dynamic, but those are assets and businesses which add value. So the COVID-19 doesn't really discount those businesses. On the other hand, if that would be the case, most probably we'll be less interested in those businesses, because these 3 businesses nicely strategically fit in our nutrition growth path into using ingredients globally to tailor them for local solutions in selected end markets. And I think in that case, we're very proud to have done 3 high quality acquisitions over the last 6 months. By the way, Eber needs to still to be closed, so we did the signing.
Dimitri, can I pick up on the geographical breakdown you're seeing here? Obviously, you've been in China for some time. You have operations. It's also a customer market. Can you tell us how what you're seeing in your Chinese business compares with Europe or the United States at this point?
Yeah, I think it's clearly said that China is a key market for us. It's about over $1 billion US sales. What we have seen initially was a slowdown, obviously in Q1 when COVID hit first, but we also seen strong recovery. And what we see now in the nutrition business is quite a strong recovery going forward. However, for the automotive area, we've seen that it's stabilizing. So obviously operations are back on track, but they're still at levels below pre-COVID level. So you've seen an uptake, you've seen a recovery, but it's too early to say that we come back to business before pre-COVID. So if China is a sort of a first signal on what's going to happen for recovery in Europe and the US, I would say it's still too early to tell, but that it will be a fast recovery, especially for automotive, I will be very doubtful. I think it will be a long recovery time.
And Geraldine, let me just wrap up with you. Obviously, the market is very sensitive to the question of financial strength. Just give us an insight into your thinking as to if we continue to see outbreaks and a second wave coming into the winter, what that means for how you manage reserves.
Yeah, this is a critical topic, without doubt. I mean, we had the benefit of coming into the crisis with a really strong balance sheet, which is how we were able to finance our acquisition. And I have to say, we were able to place a 1 billion bond in June at very nice interest rates as well. So the market has been open at times to help fund. Having said that, it's so important to have decent reserves and to try and be consistent with your capital allocation. So in our case, we want to continue to look into the mid to long term, funding our innovation projects, also funding some of these strategically relevant acquisitions. And as you mentioned in your introduction, we want to honor our dividend because we are in a position to do so. So we will be paying an interim dividend in the month of August. But having the right reserves is critical at this time. And I think you also said in your introduction that there's a keen eye on cash generation. And in a crisis, cash is king. So cash generation is a big focus for us.